You guys have probably seen my Instagram stories with all my students' different payouts, but today I have something very special for you. I have one of my longtime students and friends. They came out to San Diego, visited me, and we did an in-person one-on-one live webinar. I chopped it up and got the most important bits so you guys can get the same payouts you see all over my story on Instagram and all of mine that you've seen on my page as well. With that being said, let's go ahead and dive into it. We're gonna break down a few trades that I took that week and really just give you guys the sauce. So today we have Naj here with me. He's been in the server for quite a minute now, and you know, we've done some business together and he's out here visiting. We're going to be teaching him in person, giving him an in-person lesson, and we're teaching it to you guys as well over the Discord. So he's passed multiple Apex accounts, done very well, been very profitable, and we're just gonna do a quick one-on-one, and we want you guys to learn from it as well. So we're gonna break down a few trades today and go over a few concepts. First concept, right? One, units of measurement. What are they? We got pips, ticks, and points. All these different things, right? All I really care about is how to measure how far a trade has moved or how far price actions move. So understanding the difference between pips, ticks, points is just going to be ratios, right? Ticks to points is going to be 1 to 4. Pips to points is gonna be 1 to 10. So with that being said, we really don't need to go more in depth on what pips, ticks, points are. They're just a unit of measurement to see how far prices move. What is the first thing that we have to recognize? Never trade before 6:30 a.m. PST. Why is that?
That's before open.
That's before the open. That's 6:30 a.m. Pacific Standard Time is the New York session open. This is very important. Why do I use this concept? Why do I trade on the session open? Because a lot of volume comes in during that session open. A lot of these traders are getting into work. There are brokers per se, and they're placing trades, maybe big business deals and other things that have happened overnight or data that they got before while they couldn't place that trade in there. All these brokers are coming in, they're placing trades in the morning, so a lot of volume comes in. What do I normally look for when I'm taking a trade, Naj?
I mean, mostly a break of structure and also a high volume, like push or move.
Like an indication that the candle has a very impulsive behavior to push.
Impulsive move, exactly.
Okay, so here, where would you mark your break of structure if, let's say, we replay this to 6:30 a.m.? So the next candle is going to be our open. I want you to go ahead and break this trade down with us.
So I'll probably mark it like right here.
So are you going to take it off from the wick or the body? A lot of people get confused from the big difference between taking trades off from the body or the wick.
I was confused like this before too, because like then watching you trade and how you explain it, taking it from the wick is just like safer, especially because we're scalpers, so we want to get in and out of positions. So
another thing, what I would notice is I like taking it off from that wick because of the fact I would actually take it right off from the 625 wick if price reversed at open.
The long wick.
Yes, the wick right before the open. Because one, it's in between the body and the wick here. If price re-breaks the lows of this wick, odds are it's going to continuously break low here.
That makes sense.
And I feel like every point counts when we're scalping because we go for such small moves, right? Like what stop loss do we normally use on US30 or YM?
I forgot.
So 30 to 50 points.
Yeah, I'll be using around like 35 on mine.
Okay. So what do we see what happens with the behavior of this candle here? So at first it fixed the upside. Where would our buys be? Obviously our buys are going to be high right here, right? We want price to break structure up here. We're like, okay, if price follows this little uptrend, it could just be retesting areas and then continuing to the upside. So our break of structure for buys is actually closer than our break of structure for sells, because over the previous 2 days about price has been in an uptrend. So we're taking that trend into account for our bias on what type of trade we want to take. So when we have a counter trend trade, it's usually a little bit farther of a break of a structure, and we look for a different candle behavior for that reversal basically. So what do we get here? What I like to call this entry, this model on YM or US30 is an engulfment right here. So when we're scalping and we see price engulfs the previous candle,
Yeah.
and it's on open, odds are, if that's right next to a highly respected area, which it is right here, we see a doji candle in an area where price rejects. Actually, about 50% of this overbought area, but we'll talk about overbought later. When we see this break that and engulf the previous candle, we enter right off the break of this previous wick, rather than waiting for the break of this low here. And then we wait for price to impulsively push past our 1 to 2. I always go for at least a 1 to 2. What is our stop loss? 30 to 60 points. How long did this candle go? Impulsively, it ran to a 1 to 3. So then when it draws back about half of our stop loss, that's when we exit. And Naj, do you have any questions on this breakdown?
I was gonna say, so basically depending on how much volume like the market has before you trade, you'll adjust your stop loss.
So pre-market does determine how big my stop loss is going to be, but always I have a set maximum.
I know for a NAS it's like 20.
NAS, yeah, 20 to 25.
20, 25. Okay.
Yeah, Nasdaq NQ. And then US30, 30 to 50. 50 is okay on high volume days, like 40 is okay, but I tend to believe that if you use a 30, you can 100% catch a pretty fast break of structure and a pretty quick 1 to 2, 1 to 3.
Okay.
How do we determine the break of structure? So if we see this low right here, we have a doji, right? Well, I see that price at 625 almost looks like it's going to fake out to the bottom side, and it rejects this same area around the same place where the wicks are on this doji candle, or this area where price rejects and goes back up. So when I see that, I say if price re-breaks the low of this wick on the open, because we already know on open, guys, we get a large amount of volume on that 6:30 to 6:45 a.m. candle grouping on the 5-minute chart, and we can scalp an easy 90 points, easy 60 points on US30, and on Nasdaq anywhere from 40 to 80. So we like to scalp that really quick in and out for the day. Our break of structure is the low of here, and our break of structure for the highs is the next respected area that's less than 2 stop losses away, because it's in trend. Now that does change when pre-market conditions are different, such as price structure, right? This is just an obvious uptrend. Price could be respecting this area, so we take a very aggressive buy entry if we look at where that 625 candle ended to where its break of structure is. That's less than one of our stop losses. But if we look at it from where, in a stop loss perspective, where this candle opened, it's about 2 stop losses away from where price opened at 630. So price had to travel double the distance for me to feel comfortable that it was going to be a reversal of the trend. And that's exactly what happened. Price continued to dump to about a 1 to 3. You probably would have exited around a 1 to 2.5 or to 1 to 2.75. Yeah. This is why I also don't go break even. Yeah.
So you can get stopped out a lot of the times. Yeah, that happens to me. I was trying out like going break even after, like say like a 1 to 1, or even like sometimes a 1 to 2. If I'm trying to hold to 1 to 3, I'll put stops to break even, hit it, and then go back up. So
unless I'm up for the week quite a bit.
Okay, that makes sense.
If I'm up for the week quite a bit.
If you want like a little safety net, then understood.
So how would you trade this PMI day for the 6:30 a.m. open? Well, one, we're going to be using the wicks to think of this as a channel. Let's go ahead and rewind to 6:30. So what do we see? PMI created a large oversold area. I like to talk about oversold and overbought a lot. So we call this oversold. Right, it's where price moves quite a large amount. I'd say on Nasdaq, oversold means, to me at least, like 100 points, 80 to 100 points. Let's see how large this one is. This is about 170 points. So when we see how large this gap is, we know price has to refill that. This was just a news event. So how do you trade this? Because really there's no structure, zero structure for price to go off from. Well, what I believe is now price has created a channel for it to consolidate in with the highs right here, the high and the low of these two areas. And if price breaks in either direction, we go ahead and take that. But our huge bias, or our bias basically, is going to be to fill this area right here, this gap in price. This is the area we want to fill.
Would you hold that all the way up to the last highs, or would you just get in and get out.
Nah, well, I believe that these get filled to about 75%, and if it breaks that 75% level, it's going to fill it completely. So this is going to get filled, and we make sure that the next little resistance area is not. Well, guys, this gets filled, right? 75% to 100%. If it breaks 75% of this oversold area, right? You guys see that? Then it's going to go ahead and fill it to 100%. In my experience and opinion, more often than not, this happens. So what happens at open? Well, we get a solid break of structure to the upside, and we take this right off from the break of the wick, guys. And how big of a stop loss do we use on Nasdaq? We use 20 to 25 points. Okay, what's our target? 1 to 2. And where's that 1 to 2, guys? More often than not, it just so happens that it's almost always under 75%. Why do I go for 1 to 2s? What makes the 1 to 2 make sense? Let's go over a few properties. 1 to 2 with our risk management. And what's our risk management? 1 to 2 stops you from breaking consistency rule, keeps your win rate high, allowing you to reach that minimum 7-day $200 profit that a lot of these prop firms have, like Top Step and shit like that. They have that before you could get a payout. Not only that, but we like to risk manage a little differently here. I like to risk about 1% of my thing. So on a 50K account, I use one contract. And what is one contract on NQ? And this is the same for forex, right? I use about 1% risk. One contract for a 20 pip stop or 20 point stop loss, which is going to be 80 ticks, guys. And it's going to be like 200 pips. That's what that math that is behind you right there is for. Yeah, fine.
Bro.
Yeah. I got the degrees in the back, but all right. It's going to be a $400 risk, so just under 1%. Is going to be like 0.8, 0.9%. So that means I'm going close to like a 1.6 to a 2% gain on each, right? If I use a 25 point stop loss, which is 100 ticks and 250 pips, that's going to be that full $500 risk, which is going to be 1% of 50K. So that's our risk management on a 50K. Transfer that to different risk management things. So when you hit a 1 to 2, how much does that mean? A 1 to 2 means basically I'm risking $400 now if I'm using one contract to make $800. And often I clear 1 to 2.5s quite a bit and 1 to 3s quite a bit. If you use that break of structure thing that I told you, if it impulsively pushes past a 1 to 2, you close it after it draws down. And you might catch a 1 to 2.1, a 1 to 2.2, a 1 to 2.3, 1 to 2.5, maybe a 1 to 3. Whatever the fuck it is, you will add up at the end of the month and the end of the week, and it will help. And by risking like we are doing now, you don't break the consistency rule, right? 1 to 2.5, what does that mean, guys? At a $400 risk, we're going to be making $1,000. That's still under our consistency rule. Usually that consistency rule is going to be close to about $1,500 to $1,600 limit for most of these prop firms daily or per trade. And what scenarios am I exiting trades early? I don't mind exiting at a 1 to 1.8 because even with a 50% win rate, a 1 to 1.5 will keep you profitable. And another thing is if you break it down mathematically to like as much constants as you can, you start to do statistics on the math to where it works. Yes, Jonas, this is true, but you're not gonna blow the account. I don't mind because I don't lose like that, Jonas. This is if you lose a lot. I'm taking max 1 to 2 trades a day and at the most 3. And really that's if I'm trading 2 sessions. If you lose 5 trades in a row over 3 days, that's a blown account. Correct, Jonas.
For what size?
I heard in futures payout is over 100K. You like that one, Jonas? The average payout is over 100K. Is it true? No, I don't know anybody who's gotten a payout over 100K in futures. All right, so let's go ahead and go over one more trade. What I want is Naj to break down. So this is 6:30. This is 6:25 a.m. Out of everything I've taught you, I want you to break down the trade, and then before we press the next candle on what happens, I'm gonna break this down for you.
So the way I break this down, so I see the price is, coming up to this area, so I would use this as a key area too. But obviously, this is a better area because you have here, and here, where price came up and retraced back down. And then for sells, I would probably get in at the bottom of these wicks, just because I see it's wicking out so many times. So that's basically how I break that down. It's pretty oversold too. Like you have 4 red candles, and then it automatically stops the momentum with a doji like this. So that's a good sign that price kind of wants to go back. And it's been in the uptrend already as well. So my bias will honestly be to stay in the uptrend until we get a crazy impulsive move down to the sell side.
And fill that overbought area over there.
Yeah, unless we get a crazy move down, then I would think that, okay, we want to fill this up. But right now, I'd probably be looking for buys.
One thing I would like to do for the buys is I'd probably go a little bit higher, right? Just a tad higher. I want to avoid a fake out. And my main goal, I'd actually go a little bit more aggressive with the sells, and I would want it to break here and fill this overbought area. Okay. So now we can see what happens with the open candle, right?
Oh, fakes out.
Price fakes out to the upside, but let's look how far it fakes out. That doesn't close below our stops. When you took this trade as it broke structure here, right on the break of structure, price didn't actually hit your stop loss on this day if you were watching news. It came very close and edged. But what happened next? Price continuously moved to the upside. What do you do here? Well, again, price impulsively pushes past your 1 to 2.
So you wait for it to draw back a little bit?
Yeah, as soon as it draws back about half of your stop loss, you go ahead and exit. You secure the 1 to 2.3, 1 to 2.5.
And that adds up as you keep securing those.
You says do the random replay button. That was definitely a hindsight trade. But how is it a hindsight trade if we took the fucking trade live, dipshit? Like, come on now. I entered and exited this shit live on the fucking VIP.
We already took
with the profit on the screen. So I'm breaking down trades that we have taken on stream. Yes, 1 to 2 is more than enough.
Yeah, that's the problem with me. Sometimes I get greedy and try to hold to 1 to 3.
Yeah,
1 to 4.
You don't want to be holding to 1 to 3. I like scalping 1 to 2 to 1 to 3 and limiting my amount of trades. Trying to see something.
No bullshit. See some shit.
No way. Oh, okay, guys, I'm back. Sorry about that. Okay.
Lock it. Come on. Lock it.
In.
Yeah, lock it.
Lock in. Now you break this one down, Naj.
I mean, this would have been an obvious trade, little It's pretty damn simple.
Are you taking that off the wick or the body? And what's your bias here? Give him your bias.
My bias would probably be buys. But I think I might get in this a little bit late just because I would be scared to get wicked out or some shit. I probably would have waited a little bit and took it from right here. Right.
Why would you have waited it for it to push back so far?
Because I would expect it, if it really wanted to go down, I would expect it to wick up and then come back down if it wanted to go down. Okay. So I'd probably just wait a little bit.
So you're trying to avoid what?
A fake out.
People are trying to oversimplify something. You need to look at the candle's behavior. Like if you observe how he waited to see if price was going to fake out to the bottom side before entering this trade. Did you guys see how he waited?
And it did end up faking out.
Yeah, it did end up faking out. And you see how far he waited for it to push. He even marked up the trade on the 30-minute rather than the fucking 5. And he already knew to wait for price to push about more than one stop loss above because price was in a consolidation range, leading him to believe that there was going to be a fake breakout and possibly a reversal. Right, we don't trade on red folder news. That's another thing. We stay away because it can affect the market. There's a lot of fake outs on days like, FOMC? And if you guys ever are messaging someone about the mentorship, the only other person that you can message is Naj.
Yeah, at Najex.
With a breakout strategy work on gold GC1. Yes, sir. I love GC1. I love gold. Can you trade London? Yes, London is DAX and UK 100, treated like Nasdaq and US30. And only traded at that session open. How can you see the fake out? Different situations, I teach a lot of them in my mentorship. Like that's how Naj was able to even understand on the 30-minute without even seeing that the price action on the 5 faked out that he needed to wait for a breakout at least 1 to 1.5 stop losses away because it was in such a tight consolidation range. In consolidation, I wait for a retest. I do not wait for a retest. I just wait for price action and the candle behavior to be correct. A lot of the breakout strategy is the candle behavior rather than just taking a break of structure at a key level. You have to look at how price is moving and pushing, right? The impulsivity of the candle, basically. I'm pissed off. I think my neighbor got a boyfriend, man. Car. Wait, how did he see us?
Imagine that. I ain't gonna lie, we been calling a lot of motherfuckers dipshits over here, bro.
Where'd you see me, bro? Probably on Eddie's girlfriend.
Hey, don't let him say that, Eddie.
My name is Eddie, and I like tortas.
Jet2 holiday. And right now, you can save £50 per person.
I don't even think Eddie's in here. Nah, see, that's just some bullshit right there. I was actually like, I was kind of hot about that. I was like, oh, that's a sweet woman.
It was like, that's perfect.
She looked like she cooked you cookies, you know, and like bake you shit.
What is it called? Miss Jackson?
Yeah.
Miss Jackson. I am for you.
All right, let's get drunk. All right, guys.
Switch to the vlog.
Cut. We switching to the vlog.
Switch to the vlog, man.
He said he wasn't. I said I wasn't drinking liquor no more. I'm still gonna drink wine.
You said I wasn't drinking liquor. How the fuck else you gonna get drunk? It's all the same shit.
All right, you guys. I'm gonna go get some wine. We're gonna have a good time. We're gonna go be watching the UFC fights at the pool parlor. We're gonna go watch it at Hong Kong, Tijuana. A bunch of strippers.
I told you in the chat already, I'm trying to be around a whole bunch of big booty Latinas.
Oh, hey, stop.
All of that. All of that. Yeah,
all right, chat. We're gonna be out, man.
He said, where I live. I'm from
Isaiah
Jersey,
said,
bro.
where are we gonna be at tonight? We're gonna go to Society.
From Jersey, bro. There's a whole bunch of Dominicans over there.
I'm gonna get some liquidity tonight.
Some liquidity today.
I'm gonna bring some tortas. Oh, my boy Nas loves tortas. All right, y'all. We gonna head out, and I appreciate every single one of you. Adios. Go watch the UFC. Be safe tonight.